If you've been dreaming of owning a home but keep hearing you don't qualify, listen up. I'm about to walk you through exactly how to qualify for a mortgage in 2025, even if it feels impossible. Rates are high, prices are higher, lenders are picky, but qualifying isn't magic, it's math. And if you know the numbers, you can play the game. Step 1, know your credit score. Most conventional loans want a 620 plus score. FHA can go down to 580, but the better your score, the better your rate. Best action steps, period. Check your credit report for errors, pay down revolving balances, and avoid new credit applications before you apply. Step 2, understand DTI, your debt to income ratio. Lenders usually want your DTI at or below 43%. Example, if you earn $5,000 per month, your total debts, including the new mortgage, should be $2,150 or less. Lower DTI fast by paying off small loans, consolidating, or raising income. Even a little improvement can tip you into an approval. Step 3, save for a down payment. You can buy with as little as 3% down for conventional or 3.5% for FHA. But more down means lower payment, better rate, and possibly no PMI if you cross 20%. Step 4, get pre-approved before you shop. A pre-approval letter shows sellers you're serious and tells you exactly what you can afford. It also surfaces problems early, so you can fix them before you're under contract. Step 5, keep your finances steady. No new cars, no big credit card purchases, no job hopping mid-process. Lenders want stability. Sudden changes can derail an approval at the finish line. Qualifying in 2025 is about preparation. Nail your credit, lower your DTI, build your down payment, get pre-approved, and keep everything steady. If this helped, follow Cash and Keys for more mortgage tips, and grab the free mortgage calculator and qualification checklist linked below.